Good day, traders. Today, I will be introducing to you one of the most important key point in joining Bystra Legacy, which is the danger zone support and resistance. I believe that there are a lot of traders unable to identify a strong resistance and support even on a higher time frame. Danger Zone SNR is a very crucial tool for us to identify whether the price is going on a reversal or on a continuation. Please pay attention, jot down as much point as possible, and you might gain a lot from this topic. So let's get started, guys. Let's look at the main function for Danger Zone SNR. So the first thing about Danger Zone SNR, it is to monitor the zone. So when the price enters the support and resistance danger zone, we have to check whether the price is doing a breakout or the price has rejected from the zone. So it will be the monitoring, either rejection or a breakout. Second function is to determine the price direction. After a reaction from the danger zone SNR, then it is much easier to identify whether the price is going on a bull or on a bear movement. Last but not least, it is the chances for us to entry using the concept of smart entry. So whenever a price has reacted from the danger zone, we will use this opportunity to enter with the F5 setup. It will lower our risk significantly. You will learn about smart entry towards the end of the course after we have learned all the basics. Now let's look at what we shouldn't do when price comes into the danger zone SNR. First, never set your order at the danger zone SNR area. It's because, as we mentioned earlier, it is just as a monitoring zone. It's not for us to set our order limits. Secondly, please guys, be smart about your trading. Do not entry full margin at the danger zone SNR. Okay, when there is no rejection, remember guys, do not entry. It will become a very high risk setup. Thirdly, there is no point that you are trying to show off you have a sniper entry just because that you are predicting the price will reject in the danger zone SNR. This is the same case like you're trying to put a PO in this area. Guys, as I said earlier, please, there is nothing smart about trying to show off your sniper entry. The only thing that is smart to show off your sniper entry when you can lower down your risk so much that it is even lower than 10 pips. You will learn this one about the smart entry later on. But most important guys, do not do this. High risk and it is not worth it. Please be smart and do not try to show off something that is not worth to lose. Now let's look at the detail of the danger zone SNR. First, we are able to identify a good strong support and resistance. So for currency pair, normally the valid time frame would be daily and above. For me, my preference, I always prefer to use weekly. It is much stronger. Of course, definitely, it is more reliable. Daily, yes, if it is the same aligned together with the weekly time frame. So guys, currency pairs, for any normal pairs, do not use it at the time frame of H4 and below. Price will just break out very easily. Now, for time frame, daily and weekly, it is compulsory to have the second movement, whereas the monthly time frame doesn't require the second movement. What is that? I will show you in the next slide. What is a second movement? A second movement is just to strengthen the danger zone SNR. When there is a second movement exists, then the support or the resistance will be much stronger. So how does the second movement looks like? Let's look below. First, let's change our weekly or our daily time frame to the line chart. As we can see in the line chart, this will be our price. So let's mark the support and the resistance. So bottom here will be a support At the top here would be your resistance. So this is considered as a big movement. When the price touch this support and quickly react, go upwards quickly as well, then this is considered as a big movement. This is also a big movement. This also can be considered as a big movement. This also can be considered as a big movement. It pull back a little bit and then move down. Pull back a little bit and then move down quickly. So these are all the big movement. This is not the big movement. This is not the big movement. Okay, guys? Next, this is what we call the second movement. This area, this little shape is like an AV. Okay, an AV price goes up, pull back, and then this is considered as a second movement. Even this kind of shape, when you see in a line chart, it is also considered as a second movement. So let's mark the rest with the second movement, and we will mark this as the resistance, not as a second movement. This will become a second movement as well. So there is no such thing as a third movement or the fourth movement. The moment when price has a resistance on the top, this will be your second movement, and this will be your resistance. Come back down, this will be your second movement. Now, I know you guys were going to ask, what about here? Yes, this you can mark as your support. This you can mark as your support. No issue. This you can mark as your support. Your support. So normally, what price does is like this. Even though this is a second movement, doesn't mean that we will ignore this area. We will still mark this as our danger zone, as a monitoring area. But most likely that the price will react towards a support and resistance that is very strong when there is a second movement. Is normally at this area, with this area, or this area. Okay, so when price comes back to this area, then it will go all the way down again. Same goes when price comes back to this resistance here, and then price will go all the way down. So most likely the price will react when there is a strong resistance with a second movement. Now guys, I'm going to show you why is it that the monthly time frame doesn't require the second movement. As we all know, in 1 month there are 30 days, definitely there are more than 4 weeks. As you can see, on a monthly time frame, normally you will see like this one candlestick, and one candlestick. However, if you move to the weekly time frame, you will see something similar like this. See, there's a up, down, up, down, up, down. Okay, and this is marked as the second movement. Now here will be your resistance, and here will be your support. Alright, here could be your support as well. We just mark it, like I said, we just mark it just for monitoring purposes. So this is the daily time frame. We mark the second movement. Now let me have you to mark the resistance. The resistance, this will be your resistance as well. So here can be your support, here can be your support, here can be support, support, support. Okay, so all of this, whatever you see the edge, we just take it as a reference, as a monitoring zone. So in the next class, we will learn about how to mark our danger zone. Just remember guys, we just mark this one as our resistance, our support, breakout, resistance, support. This is as our second movement. This is as our strong resistance, which has a second movement. Okay, strong resistance with the second movement. So how do we know that this resistance is strong with the second movement? Always refer to the right, not to the left. So to know that this resistance is strong, it must have a second movement on the right side. Same goes with this one. So if let's say this is a strong resistance, how do we know that this is a strong resistance? This will have the second movement on the right side. So we look to the right. This is the second movement. Hope you guys can understand about this, because when we go to the marking later on, we will be much more clearer. You won't be doing any assignment on this class. However, I'm not sure on the rest of the class. So I see you at the next class.